Good evening, folks, and welcome to the Contrarian Trader. This is Robert Desmond. It is Thursday, November the 20th, 2008. Folks, I'd like to pick up today where I left off on the November 19th's commentary, where we spent a lot of time discussing the price action on the S&P 500. You'll note that, again, I'm going back to a monthly chart for those who watch my past couple of videos. In this type of a market, you need to look at the big picture. If you're going to be, I'm not a day trader. I don't trade stocks in and out every day. That's not what I do. I'm a position trader. I look out for, whether it be a few days or it could be however long it takes to have my position stopped out. That's all along I'll be in that trade. But I'm not a day trader, so I like to look for the long-term trades, if possible, intermediate long-term trades. Now, we are going to focus on the monthly chart because the monthly chart gives us the big picture of where the major support levels are. We're taking out key support levels here. Here, 1100, 944.75, gone. Key support levels. And the mother of all support levels was this 775 level. Why? The reason why it's the mother of all support levels is because it marked the low of the 2002 bear market, and the fact that we not only hit that price target today but closed below it. I'll be honest with you, it's been my price target, but I didn't expect to hit it today, and I certainly didn't expect to slice through it like a hot knife through butter. I was rather astounded to see that. As I mentioned on my previous video, that were we to make a new daily low, were we to take out Wednesday the 19th's lows, I was going to stop out of this market on the long side. We had a rather large position in the SSO, which is the Ultra S&P 500 Pro Shares Fund, and I set up in the computer, automated, no emotion involved, preset before the market opened. As soon as it hit that low, I was out. So at the end of the day, it pays to show discipline, because if you take a look, I was stopped out within the first couple of minutes of trade on the day. And if you take a look, I checked it in the markets very late in the afternoon. There's no sense in sitting here and just watching the massacre that was occurring, and I saw that we were at extreme oversold levels. Massive volume, as you could see here. Looked as if it was a lot of capitulation selling with some buying mixed in. There probably was some, because we see a key reversal here. This is a 15-minute chart. Let's back it out to a 5-minute chart. I guarantee we're going to see some rather large spikes in buying as well. Yeah, and that's the last 5 minutes. It was guys like me at 3:59 in the afternoon. There was only a couple of seconds left in the trading day. I sent out a market order because I wanted to take advantage of this oversold level here, because it looked as if that we were at extreme oversold levels, and that more than likely we were going to see a pop going into Friday morning. Are we going to be able to make a rally out of Friday? Perhaps we could, but the key, using the SSO as my proxy for the market here, I'm going to want to see it be able to first get past this 22 resistance level. If it's able to do that, consolidate some and then head higher, that would be bullish, because then that means that we would have recaptured that 775 level. And if we could hold that level and even not necessarily proceed higher immediately, but consolidate across that level, watch the down volume drop on down days and watch the up volume increase on up days, that would be bullish. But that doesn't take away from the fact that I had to lower my price target today on the S&P 500. The fact that we took out that support level troubled me deeply, and I can't ignore it. And as a technician, what that tells me is that I had anticipated that once we hit that support level at 775, you were going to see buyers come in, program trading kick in, buying, boom, massive buying. It didn't happen. We didn't get it. We received some buying, but we gave it all back up, and we closed below it. There was no conviction on the long side here. And there's a lot of money, a lot of cash on the sidelines. You have money that is sitting in treasuries earning zero. And if you want to do the math on it, if you want to add in inflation, people are not taking the loss on their cash positions. But there's so much fear out there, and there's such a lack of confidence in the market. People are willing to take the loss in real terms on their money by sitting in treasuries. I think that the treasuries may be paying 1% at tops. So I find it shocking that there was really no institutional buying at all at the 775 level, and that's concerning. So that forces me to reduce my price target to 600 on the S&P 500, and the last time we saw that was back in 1996, if you can believe that. It's quite amazing. Let's take a look at the futures and see how we're doing over in Asia. Asia. Alright, the Nikkei's down 244 points. That's not all that bad, to be honest with you. I would have expected to be down a little bit further. If we can close up on the Nikkei today, you may see some fresh money coming into the U.S. markets. Again, as I said yesterday, any action on the Nikkei is a reaction to the U.S. markets. When you do see a bad day in the United States, this is what I've noticed. If you see a bad day in the United States and you see the Asian markets able to rally, that's a sign that bodes well for the U.S. markets. So I'm going to keep an eye on this throughout the evening, and hopefully we could see some positive action on the Nikkei. It's very early yet, but let's just take a glimpse anyway at the U.S. futures market. And I'm not sure what fair value is. Dow futures are up 87 points. S&P 500 is up 6 points, 6.6 points, and the NASDAQ is up 9.5 points. Where cash is, where that is to fair value of the cash, I'm not sure. And even if that's really even significant, but green is better than red. So we'll take that with a grain of salt. We still have quite a long time before the U.S. markets open. One interesting point I'd like to bring up is the action on the VIX today. Here's my thesis on the VIX, is that I found it interesting that as we broke to new multi-year lows on the S&P 500, the VIX didn't even test its recent high of 89.53. So that makes me suspect of how much actual fear is out there in the market. So if I'm going to keep an eye on this. I'm willing to bet that we're going to come up here and test this 89.53 level, but as I like to say, the test is always at the top. And if the VIX fails to be able to break through this 89.53 level, and we break below this 44.25 level, that's when you're going to see a massive rally in this market. And mark my words on that. If we break below 44.25, we're going to see a massive rally. But that's going to be a secondary indicator. For technicians like me, I'm going to be watching the 89.53 level. If we're able to, if the VIX fails at that level, you know what? That's going to make me a little bit more brazen in my buying. So I'm going to step up the buying a bit. And if we break below the 44.25 level, I'm going to get real bullish, real fast. I'm going to get real long, probably using options. So let's keep an eye on that. And the other, what's going to be the key? Why are we here in the first place? What's going to be the key to getting us into a new rally? The proximate cause of all of this nightmare, besides the federal regulations and the incompetence out of Washington, are, I should say, the financials. The XLF closed below 10 today, which is just amazing to me that we closed below 10. The fact that Goldman Sachs closed below its IPO price is, again, amazing to me. Had you said to me a year ago, Bob, the Goldman Sachs is going to be trading below $55 a share, I would have said you're nuts. But here we are. It closed today at $52 a share. There's something going on over at Goldman Sachs, and whatever hedge fund they have in that bank now, whenever they decide to disclose, it's going to go belly up, or they have toxic assets on their books that they're going to write down, and we finally see a rally out of Goldman Sachs. That's when you're going to see the financials rally. That's when you're going to see the market rally. It's critical to have the financials join in. Without the financials, you're not going to see a rally in this market. So please subscribe to my channel. If you have any comments you'd like to make, please leave those comments. I want to thank everybody for your emails to me. If you want to email me with questions, bob@thecontrariantrader.com, and for the spelling contrarian, it took me a long time to learn it myself. There it is. Email me, bob@thecontrariantrader.com, and I'll be more than happy to answer any questions. And have a nice night, and please subscribe to my channel. Thank you.